All right, I'm here with Ashley Friedman, partner at Signet Healthcare Partners. Ashley, welcome, and we're here at LSI USA 25. How has your experience been so far?
It's been awesome. Thanks for having me. It's my inaugural LSI, and probably be coming every year from now on.
That's
so,
great.
Yeah, it's been great.
I was reflecting on how we met, and we got connected on Zoom. I think we had some mutual friends. Quickly realized that there were some deals that had taken place. So maybe you can share a little bit about your journey, what you've done, and then what you're working on today.
I'm surprised we hadn't met before and connected before, but here we are. So I'm Ashley Friedman. I'm a partner at Signet Healthcare Partners. I run the medtech practice at Signet. Signet's been around for over 20 years. We're investing out of our fifth fund, which is a new fund right now. Goal is to do 8 to 10 investments out of that fund, $20 to $25 million per deal. We're commercial-only stage investors. So we don't have rigid criteria, but we're typically investing in companies that are at launch or a little bit beyond that, so something in the sort of $5 to $10 million revenue range. We're therapeutic area agnostic. There are areas that we like more than others, obviously, and we could talk about that a little bit more. But we invest exclusively in pharma and medical devices, and all the device stuff runs through me.
Mm-hmm. And I know that in some of our early conversations, there were some nice success stories from the past. What have you seen at this event? Any standout companies, or do you not come here looking for individual companies, but rather to syndicate and talk and get general trends? Is it looking for targets, or is it more a general kind of figuring out the market sort of a strategy for you?
It's a good question. You know, I actually came with a pretty blank slate. So I told myself I was going to keep an open schedule. I was going to come here, do a lot of networking, and by the time I got here, I was back to back with meetings. So we met with a bunch of companies while out here, and you know, my sort of general rule of thumb is invest in a lot of 15-minute meetings and try and get as kind of broad a feel for who's here. So we were doing a lot of those meetings. We spoke to some strategics, caught up with some peers at other funds where we have overlap. Spoke to some folks who invest a lot earlier, so you know, their portfolios might emerge as potential entry points for folks like me. So it's been a mix of everything, and it's been really efficient.
Yeah. So you mentioned connecting with strategics, and because of the thesis for your fund, later stage, commercial stage companies, I think one of the things that we don't talk about enough is sort of, I guess, thinking about the end in mind, and like, so we're solving this problem, or building value, or helping a patient, but preparing maybe for the exit, and you have some experience with that. What are some things that we need to be thinking about maybe a little differently, or maybe a little earlier? Thoughts on that?
Sure. Yeah, no, it's a good point. As late stage investors, we're seeking to be the last round of private financing for a company. And you know, investing's the easier part. It's the exiting that's not so easy. And as you know, there's been a dearth of exits over the last couple of years. And so when we're investing in these businesses, we really work backwards from what we think the phenotype and profile of the company needs to look like at exit. And then we figure out what we need to do in order to get there in a 3, 4, or 5 year period. You know, faster is better, but we have to work with where the company is at. And, you know, I think it's bespoke. It's not the same thing for every company. It's not necessarily about maximizing the top line. It's not necessarily about getting to break even or profitability. There's a mix of things, right? It might be that you need to run a study for reimbursement and invest in that. It might be that you need to figure out what your commercial model looks like before you start putting your foot on the gas. And then depending on who your ultimate buyer is going to be, whether or not you're profitable or burning is going to be important, because there's a cadre of buyers who are all about growth, depending on the size of the markets you're going after, and those are the big guys. But then there's another tier of buyers that are much more focused on being able to absorb something without incurring a lot of dilution. And for them, at least in my experience, they're hyper-focused on not inheriting a company that's burning a lot of money.
Right.
And so you don't necessarily need to be highly profitable, but you also don't want to be hemorrhaging money because that's going to get baked into whether or not somebody's willing to risk their role as a business development professional
Right.
at your buyer. And so I think all these variables and ingredients are important to optimize. And so, as I like to say, at least, when we're investing in these businesses, what we're trying to do is grow enterprise value. It's obvious, but sometimes you lose sight of that.
Right.
It's all about growth. It's all about top line, or it's all about profitability. And I think it really depends and varies depending on the situation you're in.
2.5 months ago, we're at JP Morgan. I would say, a lot of optimism about the market.
Yeah.
It's been a little dynamic in the marketplace, maybe a little, things have changed a little bit. What's your overall perspective today, March 2025? What's your outlook on the market today?
Well, I think the med tech market is about as robust as I've seen it in the last 10 years, in my opinion. You've started to see some exits occur, larger exits as well in the public markets. I think you've seen some exits start to happen on the private side as well. Thankfully, we were part of one of those.
Yeah.
In the IPO market appears to be open. We've been told that it was going to be open for the last 4 years, but here it is now. And I think at least the first 3 companies that have gone out, which are high quality businesses, have attracted good entry multiples. They've traded up after going public. And it just seems like there's a supply and demand mismatch for new assets coming into the public markets, because a lot of the prior class of IPO candidates have been taken out at this point. So it's always good to have that supply and demand mismatch. So I think the market's really strong right now.
That's great.
And I think sentiment is improving too.
Yeah. We agree with you. And one of the things we look at, just a very simple metric for us, is who's showing up. And if you base sort of the attitude of the market right now on the volume of investors that are showing up and the appetite for new deals, just based on this meeting, then I would say that there's a very healthy mix right now. One of the things I wanted to ask you about that I have observed personally in the last 6 months and coming to fruition here at this event is we have new capital that's coming in. So, for example, we can call, a friend of mine likes to call them the conspicuous outsiders. So investors that maybe previously would be considered deep tech investors are now coming into the space. Groups like DCVC, traditional deep tech investor, now has some tech med or med tech plays. And we're seeing more of that. Is that a fluke, or do you think that's a trend? Or what are your thoughts in general about the capital flow?
In the areas that I'm looking at, and maybe I'm a little bit an old school med tech guy, so I'm not doing a lot of AI and sort of fusion between devices and health tech. So I think I see less of that type of tech type of capital coming into the space, although I know it is because of that convergence, which makes sense. But the other type of capital that I've seen come into this space more over the last 2 or 3 years is from family offices.
Right.
And that can be very sophisticated capital that comes with different sets of timelines and constraints. Right. Sometimes good, sometimes maybe not. But that's the bucket that I've seen coming into the market more over the last couple of years.
Yeah, we had a reception last night, and there were a handful, more than a handful, of new family offices that are interested in the space. And we also think that's a positive for the market. More capital in can only be good, a good thing. So any watch outs or things that you think companies that you're either investing in or just maybe providing counsel to should be thinking about as they're getting to that commercial stage where Signet is really maybe going to take a serious look at them? Sure.
Yeah, I mean, look, I think there's a couple of things. One is when you get approved and you're going to go start commercializing, it's like everything you did before that is done.
Right.
That's the good news. Your commercial is the good news. The bad news is everything you did before that is in the rearview mirror. So now you have to think about commercialization. And I think the biggest mistake you can make is to overinvest in sales and marketing before you have your economic and clinical value proposition nailed down. That's the single biggest thing that I look for. Show me that you can do this in a handful of centers. Show me that you know what works, what doesn't work. And oh, by the way, you only figure some of this out when you enter the market, right? Show me that you have earned the right to spend money on sales and marketing and raise money so that you can get yield from that and build enterprise value. And it, unfortunately, the path isn't always linear. It's sort of like Charlie Brown's shirt, it goes up and down. And a lot of device companies, just given how the regulatory frameworks work, you get to market, but you don't necessarily have the right type of data that maps to what is required to get reimbursement, right? And if you're in sort of reimbursement no man's land, you're continuously having to push and push and push. And so the idea of spending a lot of money on commercialization when you don't have the ingredients in place that enable you to do that is a mismatch in my mind. And so I think you have to make sure you've got all those things in place and you've got that model, and then you can scale it, and then you can add the growth capital to try and let that escalate.
It can be, I imagine it could be a painful mistake if you go too fast, too soon.
It can, and I think it's a bet the company event sometimes, right? You hire 40 or 50 reps, they're expensive, you don't necessarily have these ingredients.
And you figure something out later.
Figure something out later. And by the way, if it doesn't pan out, now you have to probably raise that money again. And oh, by the way, you don't get that many shots to be the new shiny toy in the market.
So are you coming in before that decision tree, or are you coming in after and giving them the guidance?
So it's a bit of both. There are instances when we're coming in after that mistake has been made, and that can be a little bit more complicated and painful for everybody, because
got to fix it.
You got to fix it, right? And then there's the other side of that coin where we're coming in, right at that sort of inflection point where those ingredients are in place, and now we think we can help the company really accelerate. And say, okay, here's what we think we need to do. This is going to be $25 to $30 million. We need to do A, B, and C, and hopefully we can accelerate both value creation and path to exit.
Makes a lot of sense. I wanted to go back. You had said market agnostic, but there's some areas that maybe you especially like. What are you? Maybe you can talk a little bit about the markets that you're most excited about, or just in general, what are the things that you're optimistic on?
So we gravitate towards highly concentrated markets. As a commercial stage investor, the things that I really look for are high ASP, highly concentrated market, and I'm willing to trade off market size if I think I can access that market as a small company. So maybe the best example was one of the last medical device deals we did, a company called Paragonix, which is in the organ preservation and transplantation space. So in that area, there are 250 transplant centers in the US, and probably 200 of them do 80% of all the volume in the US. And as a small company, you can get to all 200 of them, and you can spend real time with them. And that to me is really, really interesting. The flip side is it's not heart failure, it's not renal denervation, it's not a $10 billion market. But it's a super, super concentrated, highly addressable niche market. So we're really attracted to niche markets. Now, a little bit of that is also because we're a little bit of a smaller fund, so we're not writing hundreds of millions of dollars. We're investing $20, $25, $30 million, and we can obviously create a syndicate. So it's a little bit biased because of the lens through which I'm looking, but we really like targeted markets. So organ preservation is an example. The transplant space is perfect. Interventional spaces are areas that we like. Again, specialized, usually procedurally intensive, and you know where to go and how many people there are that you need to get to. And so we like a bunch of the interventional spaces. We've done investing in most of the interventional spaces over time. Those are the types of areas that we like. again, I know I'm not giving you specific therapeutic areas.
Yeah, no, that's very helpful. So Fund 5, bullish on the market, come to LSI with a blank sheet of paper, end up being in a bunch of meetings. And I hope you'll be at the investor dinner tonight where you can talk to some fellow investors, both like you said earlier, it's good to talk to the early stage investors, but also talk to some that are later stage that are also here, that are doing similar deals. We need more of you here. You're obviously doing something right, being on your 5th fund, and hopefully we'll see you for the 6th and 7th. And I don't know if you have any final thoughts that you want to share, but it's been great sitting down and talking to you.
Yeah, no, I really appreciate it, Scott. I mean, I think this is a great event, and this is the new MedTech conference, so you got to be here.
Well, thanks for spending some time with us today, and best wishes.
Thank you. Thanks a lot.
Thanks, Ashley.